Welcome to the channel, everyone. So I've sold out of my Suncor position and I've decided to buy Google, and I'm going to be going over why in this video and just talking over my other buys and sells in my Wealthsimple dividend focused portfolio. And if you want to follow along with the updates and you want to keep up with my buys and sells from week to week and follow the journey overall from beginning to end, please hit the subscribe button. I've hit over 300, just crossed the 300 subscriber mark, so thank you to anybody who's watching the videos and subscribing, and please subscribe if you enjoy it. And I want to give a shout out to Giovanni. Thank you so much for using the referral link in the description. So I got FSell for $7.76. So if you actually join Wealthsimple in the description below, until March 24th, I believe you'll get the value of 2 free stocks worth up to $4,500. So the stock market is still declining, but hey, that's fine. At least for me, I'm a dividend investor, so I get to buy shares at a lower price and get a higher dividend yield and more passive income as a result. So no worries here. And the big change for this week is going to be that I completely sold out of my Suncor position. So I do know oil has been rising a lot, but I've been looking at oil historically, and quite frankly, it keeps going up until it's at a completely unsustainable level, and then it just crashes. So I took the profit from Suncor because the return that I wanted to get, I basically reached that in a few months, whereas I thought it would take me about a year. It just happened a lot quicker. So I decided to take those gains and invest the money elsewhere in the portfolio for something that isn't as volatile, and it won't come crashing down as fast as oil will. Whenever the oil supply is gonna meet the demand or exceed the demand, the price will tank accordingly, and it's gonna happen very quickly. So it's very hard to time commodity stocks. Now, if you're still in Suncor, of course, I do think there's probably more money to be made in it, possibly. But you do have to take your profits eventually. Don't be greedy. Don't stay in it forever. You definitely want to get your profit if you can. Depending on your outlook, maybe you're more long-term on oil, but in my case, I'm not. I just saw an opportunity to make a good profit, and I took it. So the TFSA is at 12,154.26. We're down to 34.56 today. Not much change today. Past week, we're down 2%, or about down 208.91. For the past month, we're about down 284.73, or down 2%. Past 3 months, we're down 1%, or 87.67. For the 1 year, we're up 703.93, or up 6%. And for the all-time, we're at 720.91, or 6%. So we've lost some of our gains that we've made, but everything in the market is falling. Again, that's fine by me. I'd rather have stocks go down so I could get more shares and higher yield, rather than having my stocks go up and getting fewer shares and lower yield. So since I'm long-term focused, it doesn't really bother me. All right, and before we go through the buys and sells, let's roll the intro. And for the changes to the portfolio, Apple actually just had their new Apple event where they unveiled some new products that are upcoming. They unveiled an iPhone SE, so a good budget iPhone with their new A15 chip. It's going to be really, really, really good budget phone and get people into the Apple ecosystem with a good budget product. And they also have a new line of iPads with the M1 chip, the iPad Air, I believe. And they're also going to release the M1 Ultra chip, which is just even a better performer than the old M1 and M1 Pro. So great things from Apple, just a new line of products for people to consume. Price has been coming down on this one. I'm going to watch this one. If Apple falls further, I might nab a couple more shares of it. We'll see what happens. AQN, ever since the oil stocks have really gone up, people have been pumping up the renewables, so we're almost break even on this. This has been down for a long time, but it's doing okay now. For Alibaba, again, all Chinese stocks went down, so this is just a sector-wide, region-wide decline in value, so that's fine. Brookfield is down a little bit from when I bought it, but they're doing fine. And even the bank stocks are kind of coming off of their highs a little bit. No changes with the income funds. I recently got a dividend from ETHY, so we got about $3 or so. I'm going to tell you what I bought with that one shortly. And the new position is going to be Google. So I did a calculation, and I find that Google is undervalued, at least in my opinion. It's priced, lower than Microsoft. It's cheaper than Apple. It has a higher growth rate than those companies. So it just makes no sense at where it's valued. I actually think it should be worth maybe around 3,000 or so for like a good market beating return. Since it's trading at 2,500, I think it's even better. And my assumptions are pretty low. I basically cut their earnings expectation by like a third of what they're expected to do, or even in half, and I'm getting a very, very good return on this one. So Google's a great business. I'll go a little bit more into it, but mainly just really like the valuation right now. I think it's the best value out of the major tech stocks right now. You could argue Facebook is a little bit cheaper, but I don't like Facebook's business, and I don't like that a company like Apple can just, cost it to lose $10 billion. If Google and Microsoft decided to, they could, have some privacy functions and then render Facebook's data collection part of its business, to give targeted ads and just end that business. So I don't like a business that can be destroyed by other businesses. That doesn't sound very secure or very economically stable. So I'm going to stay out of it. And I bought a lot more HYLD. So this one gives an over 10% yield. So you're like 7 different ETFs in this one, and they're all covered calls, and these leverage in this fund. So this should give you like similar returns to the S&P 500, but it's going to give you that in the form of dividends or passive income every single month, rather than just growth in a fund. But the issue with growth stocks in general, or a growth strategy, is that the price of the shares that you own are very important. And when the market heads downwards, and say you needed money or there was an emergency, you'd have to sell those shares at a very, very discounted price. And that's not very ideal. So I really like the idea of dividends, because we don't know where the market's going to head. And if it heads down, it's actually going to benefit you to be getting dividends and buying cheaper shares as the market falls lower and lower. And Intel actually had some pretty big news. So they have filed an IPO, a confidential IPO, to spin off their Mobileye business, which is their self-driving division that they bought a company a few years ago. So they're planning to, spin this off as a separate company. They'll still retain I believe 50% ownership of the company, and they're just going to raise like $50 billion in cash. That's what they're expecting, to raise about $50 billion, and then they can use that money that they raise from that to just fund their chip making facilities that they're building. So it's going to kind of de-risk it, kind of make it like a free ride for them to reinvest and reinvigorate their business and head into that chip making side of the business that they're really focused on right now for their transformation. And Loblaws is another stock where I bought another share of this. So we got 3 shares of this. So I got another share of this, and it actually shot up a lot since I bought it. So it looks like maybe other people noticed that it was a little undervalued, or people are just going for safety right now. So they're going for food, oil, anything that is pretty defensive in general. Like money's going to those types of investments, it looks like right now. And then Microsoft is taking quite a hit, so I actually picked up a little bit more of that using my ETHY dividend from before. And they also recently announced they acquired a company for speech recognition. So this is going to be used in medical care. So Microsoft is really growing through acquisitions, which is very interesting. So they have their Microsoft Office suite, Windows. They have their subscription with 365, Xbox Game Pass. Their Microsoft Azure cloud services is growing each and every year very quickly. And they can also make giant purchases like Activision Blizzard, and of course their recent buy that they just did. Power Corp, I actually decided to get 2 more shares of this, so we're up to 20. And just because it fell below 40, and I love getting over 5% yield on this stock, and this is one I want to build up more and more. So if the price stays down here, I might just continue just averaging into this consistently and growing a big position in this. And TELUS has been growing a lot, like non-stop. I really would like to pick up more of this, but it's just keeps going on a run, and it's up 17.6%, doing very well for us. So at Google, there's actually 3 different classes of shares. I decided to buy the Class C shares, so this goes by GOOG as opposed to GOOGL. The only real difference between the two are that the Class C shares, there's no voting rights, so when you buy shares of a company, you usually get to have votes. But with Google, I think that the difference between the Class A and Class C don't matter, because even if you owned all the Class A shares, like say you had them all, the Class B shares, which are held by founders, so privately held, have 10 times the voting power of Class A. So even if you had every single share here, your votes wouldn't basically matter. So if the insiders didn't want something to happen, it basically wouldn't happen. And if for some reason someone wanted to convert Class B shares, they would actually convert to Class A. So this could actually increase the amount of Class A if somebody wanted to publicly trade their private shares. So I went with the Class C, and they do buybacks on Class C, and of course Class A can't be converted to C. And again, I think the vote is irrelevant, and they trade very close to the same price anyway. So that's why I went with this version, just if you're confused about the different types of shares that Google offers. So here's why I bought some Google. So the current price that they're at right now, they have not been since about April or May of 2021. So it's been about a year since we've seen these price levels for it. It's trading at about a 22 PE, which is very, very low, only 22.69 times its current earnings. And, you know, Apple and Microsoft traded higher price to earnings multiples. Even like slow growing companies like Coca-Cola and Pepsi trade much higher than Google. And that just doesn't make sense for the amount of growth that it can have. And the 5-year estimate for their growth rate is about 27.5%. Again, I assumed that they would grow at about half that rate, and they still had a great market-beating return, and I priced the stock at a buy at about 3,000 or so. So I think it's a great buy right now. And, you know, you can see their financials. They're growing their revenues consistently each and every single year. They have an extremely healthy balance sheet, $140 billion of cash. They're a very well-diversified business, very good balance sheet, and again, growing cash flows every single year. A fast-growing company, and they're keeping their capital expenditures about in check. So they have, you know, their Google search, their YouTube for ad revenue. They also use Google Cloud, so they offer cloud services. They have other services such as Android, you know, the Play Store, the Pixel phones, and they also have a small stake of SpaceX. So that's a privately traded company. That's Elon Musk's, you know, space company, and the only way to really own it is through Alphabet stock, which is the company that owns Google, that you're probably more familiar with. So I think it's a great diversified business with, you know, I mean, it is the search engine. Like, if you want to find out anything, if you want to watch a video to learn about any topic, you're on YouTube, you're on Google, you're using their services all the time. And I just think they have a strong moat. Like, who is going to come along and take away Google? Like, just think about it. Like, do you use Google Maps? Do you use Gmail? Do you use an Android phone? Like, practically everything in my life, like, I'm relying on Google. So this is kind of a no-brainer stock to buy. And they also have like small bets that they're working on. So they're always investing and trying to figure out new things. So they invest very small amounts of money. And if they find that they can scale something up, they will invest a lot more money into it and build another part of their business. So they're always experimenting. And I think the core business is strong, and they should grow very well into the future.